All right, cool. So welcome everybody. Thanks for joining. What I'd like to try to go through today and today's exciting installment of the Gains live show, the Gains Friday live show, is I'd like to try to show kind of what I think is going on here and maybe what our next steps might be. Since we didn't get a lot of movement from the Fed today, I really kind of thought it might be good to just dissect some of the price action and kind of see what's going on. Take a look at some of the volume and really just field some questions and things like that that you guys might have. I know a lot of people are short or they've started getting into shorts, that kind of thing. Some people are getting a little sweaty holding shorts, So I'd like to try to answer some questions and make myself available here, and hopefully that'll help, or at least get some some sort of confidence in what might come next. I guess with anybody on the call, is there anything that you wanted to cover specifically that I could write down on my handy dandy notepad here, and I'd be happy to try to touch on it for you if I know what I'm talking about. That's really the kicker.
I'm like super curious what your thoughts are, like when I'm looking at like QQQ, like if this is like the rollover of the B wave.
Okay. Yeah. So let me so I'll get into that as soon as we I guess I have just a regular clean chart right now, and I wanted to try to talk through it, and then I'll definitely touch on the Nasdaq for sure. And I can take a look at QQQ.
Cool, thanks.
All right, so let's get started here. So what I wanted to try to show here is that we haven't quite made a new high yet, and I do think that with this first leg down that we saw, we saw a bit of more of like an extreme sort of move with sorry, one second. Let me get these drawings in a better spot. So we saw these we saw this ABC type of pattern here. And, another thing to notice is that we had this sort of head and shoulders sort of view where we had this higher B wave. Well, these ABC corrections, they're very fractal in nature. So we could see a larger sort of, ABC wave like this. And that's where I'm leaning to at the moment. So I would say the bearish scenario is, this specific scenario is probably, I'd say like it's 60 to 65% sort of possibility. This I would say is probably the most likely outcome. Now, the measurements of these things here, if this is supposed to be some sort of ABC, you could still consider this to be like, like a flat type of correction. Even though it did retrace really high, typically about 90% is okay for a B wave with a flat sort of correction. And just to kind of zoom out here to show you why there's some sort of credence here. If you look at how amazing these things align, the math behind all this stuff and how professional traders they get into these things is typically they'll think about what is the price target we want to hit, especially if they're trying to move markets, right? So like what's the price target we're trying to hit, and how are we going to get there? Well, as long as you know what your final price target is, you can walk it back and try to engineer whatever sort of correction or anything that might serve your interests, at least if you had it pretty much infinite supply of money. And if anybody's an institutional trader on the call here, that would be great if you could have some contribute some insights. So but bottom line here is that if we were to reverse today, a standard sort of retracement here would take us all the way down here to this level of support. Now, this isn't unrealistic, because if you're looking at the wider structure here, this is a pretty clear impulsive wave up. I don't want to zoom out even more to just confuse everybody, but you can kind of see here that this is like a 5-wave up structure. And why it's important is that typically when you do have a correction, it will usually revisit the low of the prior like the higher degree wave. So with this being the wave 4 low of the last impulsive move up, we can realistically assume here that this typical C leg extension for this 1.236 extension is actually going to be where I think that this sort of correction terminates. Now, I do think that we'll have some sort of additional rally here, but I just don't know if it's going to have enough steam to make these perpetual new highs. We did see a pretty violent buy up after we did hit that bottom I guess like a week and a half ago, maybe 2 weeks now. It was a pretty violent pretty violent buy up, but we also did have a bit of a shock. And with the Japanese yen carry trade, I think that we did have some sort of panic, some sort of like a lot of things were unwound. But something to notice about that is that if that much damage can be done with just a 0.25 or just a tiny point increase in a basis point increase in interest rates, what's that going to do to global markets if other countries start doing something like that? Because they're starting to show some cracks in the economy. We're starting to see some people that like lots of layoffs. Intel laid off 15,000 people. Intuit laid off 1,800 people. That's a stable business. So you're seeing a lot of these things that companies are doing to posture themselves for tough times. And what I would I guess what I'm trying to infer here is that if that's in line here with our seasonality, like September and October for markets, then I do believe that we'll see something like this. Now, of course, I have made these sort of projections before that have gone horribly wrong, and you just look stupid. But I still think that this is probably the highest probability outcome that we would see. Now, I'm not saying we're going to have massive meltdown. Everybody's going to be jumping out of windows and stuff, and 401ks are going to plummet. But I think that just according to regular rules and how these typical patterns form, I really do think that this 5-wave up structure here, a retracement back to this support level, where we also had a ton of volume, I believe this is where something like that would stop. I also think too here that this would be like our level 1 pullback here, so it would be a lower low, and that would qualify as I guess qualify as a completion of this, right? Or like a completion of this pattern. But I really don't think that we will see, we would see like, how do you say it? With, I guess with another sort of, if we were to see a flat, sorry, let's see if I can be clear about this. If we were to see a flat, we would see something that could be like, this, where we might see this sort of, inverse head and shoulders. And then, people might think that it's like a 5-wave up sort of thing, but it ends up being like a flat correction. And then we might see, let's say, if it was a typical like 335 sort of pattern, we could see that. Or what we could see is maybe like a truncation here, where it just remains bullish. And we had this sort of, let me just redraw this quick. Let's say we don't really make a new top, but we do see this sort of 5-wave down. And this would be like a 335, and this is a typical flat sort of correction where we could maybe breach the low. And this might, let's say, maybe September or end of September, October, that kind of thing. I don't think that the timing here is accurate I'm just trying to illustrate what we might see. So we do see this white ABC here, and if it does truncate, just slightly below, like like this 5,065 level, that's where I think we could see this jump up, and and ultimately, if the flat does actually materialize. Now let's talk through another scenario here, and these all apply to the Nasdaq as well, and I can show that here in a second. But if this doesn't quite work out this way, we could see, let's say, like a slightly deeper correction, and then that serves as like a launch point here for like a really short wave 4, and then potentially another run up, and then terminating at like a new high, maybe like a 5,800, something like that. I think that's probably unlikely at this time, at least with just the seasonality of September and October. Also with the presidential election and things like that. I mean, typically, yes, markets go up in an election cycle year. However, this time I feel like things are a little bit different. There is, like, for example, we saw a lot of the, we saw a lot of issues with, the price action in the summer. Like, yes, it was very bullish, but typically summer is boring. I mean, yes, it grinds up, but we definitely went through a mania there. I would say, like, May, June, early July, that kind of thing. Where there's just capitulation everywhere by bears. Everybody's 100% bullish. That's it's a hallmark of a late stage sort of bubble. But when it comes to like trying to forecast out longer term wave patterns, they get a lot less accurate after about 2 weeks, 2-3 weeks. But and that's why also you should be flexible and you should be realistic about your projections. And if things turn on a dime, then you have to change your analysis. So with that being said, here we'll probably end today. I mean, it's only what is it, 12? Yeah, I've got for about 45 minutes left, and it looks like just things just keep climbing up here. So we'll probably end the day here at the high, or potentially slightly below it, or maybe even a new high. We don't really know if maybe there's going to be a squeeze. That's why we're doing this right now, so we can try to see what's going to happen here. So long story short about this is the structure does look corrective, and since we did have that sort of panic a couple days ago, I do think that it's realistic that the next wave down, like, people are going to be trying to take profits here. The volume's increasing, but we also did have a Fed day today, so the volume is always high on that day. But something to just keep in mind here is that we do have a lot of this like sell delta and a lot of higher volume at these different troughs, especially this one here. But I think this one was more of some of these trades were unwinding. So like a lot of these major trades, major global trades were unwinding with the Japanese yen carry trade. So overall, you can kind of see the the peaks, and think about it kind of like an hourglass. Like the time is the time of the bottom, and also the volume is to me at least, it's a strong signal that yes, there is still bullishness there, but I think most of it is just covering. And also to another thing before I move on from this sort of view is I do think also that the what is it? I think that the market makers that were all long or had to hedge with calls or futures minis, that kind of thing, as everybody bought puts. That's, I think, why we're seeing such a high retrace. Where in the past we would see something that's a little bit different, maybe something a little bit lower after we had something like that. I was actually kind of thinking we would top out around like 55.20, kind of in line with the other highs that we had here before we had that just last final little push. So with that being said, overall, I guess if we wanted to summarize, there is the potential here for this 50.65 and also further down for this 49.30. That's at least what I think is going to happen here if we do turn around. Now, there's a second scenario which is possible. We could see. Let me take out some of this junk. The separate scenario we could see that I think I posted this yesterday in the channels, but this could be like that top of our wave 3, and then we could see this wave 4 down, and then potentially a new high. And again, I don't know where it would terminate. I have to do all the measurements, and we still have to get confirmation that's actually that's actually what we're going to see. But if we assume that this is impulsive, I mean, it certainly seems like it, right? We have this point of control here, right around this like 54.79 level, but there's also a lot of options gamma at this 55.30 level, so that this would be some very strong support for anything anything on the downside. So we might see something like this where we have a short sort of wave 4, but we could see a lot of consolidation here, because if you guys are not familiar with Elliott wave rules, typically this is called the law of alternation, where you have like a wave 2 here where it's sharp and ruinous, and then we have potentially this wave 3 or wave C. That's where we could see a lazy sort of wave 4. So we could see this sort of this sort of move here where it just frustrates everybody for another week and burns theta on options. But that is typically how it goes. If this ends up being a B wave, which is what we were just showing before, this would also qualify as like an irregular sort of correction where people would, yes, you can assume that this would be like a wave 5 or an irregular sort of correction. A lot of people get confused on that if they're doing their own charts, but you really just kind of have to call it as you see it. And that's why I was saying before, to try to be flexible with it. But that's, I would say, the two scenarios that are the most likely is that it's temporarily bullish, which could take us to potentially, like, I'd say next Wednesday, where then we have NVIDIA earnings. And that could be a catalyst that might kick it off the edge because, selling down NVIDIA would certainly move the market. Might not be a lot. I don't really know, but I do know that that the time is growing closer to September, and seasonally that is the worst month of the market, or at least the most volatility. So, and also something else to notice, or something else to mention, is that when we do have these big sort of panic events, you can see things like like these volatility spikes. They have aftershocks, so we didn't really see that. We saw a V-shaped recovery, and I think a lot of that is just because the dealers were very, very heavy long, and they had a lot of risk on their books. So they're all making money right now. Everybody else is losing money. So anyways, so that's kind of what I think has been a driver of a lot of this stuff, but then also what we might see as some sort of resolution to this rally here. Because I mean, I don't know about you guys, but there are some people that are trapped short right around here. And that's a bad spot to be trapped. But I would say just have patience. Patience always equals profit, in my opinion here, even as we're seeing the market scream up here in the last couple minutes, which I'll dive into that in a second. But longer term, I think that if you just have some patience and let these bullish patterns resolve. If you have options, you could roll them forward. You could roll them up and out where you increase you raise your strike price. But if you're gonna plan on shorting, plan on playing the long game, because we are coming into a presidential election. There's going to be a lot of volatility. There's going to be a lot of weird stuff going on. So to protect yourself and also have that downside exposure, so you might be able to profit from the elevator down if we see one. To give yourself time. So either do it with, and again, I can't give advice or tell you what to do, but just a strategy that you could use is you pick up some like a 3x leveraged inverse fund, like a SPXS or SQQQ or something that can that if we're wrong and we enter too early again, then you can at least ride it, and you don't have to you don't feel like you have to take a loss as opposed to like with options, right? So options can be dangerous, or futures if you don't hedge. But trading futures is significantly different than options. They still have that time component, but still, if you're considering a short or you're thinking that we're pumping a little too high, you're probably right. This market has been just nothing but excess for a year. But now I think the chickens are coming home to roost here. As soon as the Fed starts to signal that we're seeing a bit of a slowdown, even though they're trying to thread the needle, they're trying to use flowery language to say that things are slowing down and they're going to reduce the rates sometime soon or something like that. Timmy, you got a question? Yes, yes, we can certainly talk about that. Let me pull up. There we go. Okay, so that kind of as like that ends the S&P overall narrative part here. I think now that there's really just no like measurable selling that's happening today. I mean, if we don't see something by Monday or Tuesday, or really Wednesday with NVIDIA, then I do think that we'll probably make a new high, and just continue to head higher. But I don't think it'll last long. I think that enough people were wrecked with this huge move down, and then we jumped up so fast that there's been some people that have been left behind, and we've been climbing so much that I do think that these guys don't have a lot of inventory left, so they're going to have to push prices down in order to accumulate more shares, and just rinse and repeat for institutions. All right. So, any questions before I move on to Nasdaq and go into a little bit more finer detail?
James, yeah,
Yes.
question. Is your thesis still the same, anticipating the rate cuts in September?
So I don't think they're going to cut in September. I'll probably be beat up for saying that, and I'll probably be dead wrong. I hope not, but I think that's I guess in general with rate cuts. I mean, you hear Jay Powell say it all the time. We're trying to control inflation, and now that it's gotten below that 3% target, it's still above 2. So that means that the rate, like the rates where they are now, aren't causing enough pain to be to force them to be reactionary. And also to employment, if it keeps coming in and meeting expectations and not shooting up, that's something that's like, again, if we had, let's say, 6% 6% jump in unemployment or something like that, that would be huge. That would be a catalyst. You'd probably see an emergency meeting. Markets would probably tumble. Well, to be honest, markets would probably tumble, and then they would probably spike. Because I guess we flip flop every day now between good news is bad and the bad news is good, or good news is now bad. It depends on the narrative and things. But I think overall, what the Fed is trying to do is they're really just trying to ease up on the brakes. And I don't think they'll do anything before the election, because that would cause volatility in the markets. That would be planned systemic volatility, where markets can generate volatility all on their own. And I just don't think we know, or we're going to know what happens. I think that if we do have, let's say, a surprise with unemployment, where things look like they're deteriorating, I do think that the Fed might do maybe like a surprise cut or something in October. Maybe they do like a meeting or something, and that's your October surprise for the election cycle or something. It's not impossible. It's not it's not something that we should write off as not going to happen. But just trying to see down the road here between what the Fed is trying to do with trying to engineer a soft landing. I really think they're just trying to buy themselves more time for the election. And even though they're non-political, the Treasury is likely what's guiding them. Where I do think that they're trying to keep the Fed from raising rates even further and then torpedoing the economy. But also the Treasury can't afford to service the debt. So with higher rates and things like that, they're kind of hamstrung with that. So I mean, hopefully I answered the question, but I mean, there's a lot of people who have pretty much all but confirmed that September is going to have that rate cut. Certainly, I don't think it's going to be 50 basis points or half a percent. That's way too much, too fast. If anything, they'll throttle it back, 0.25, something like that, and maybe see what happens. But again, if we keep seeing data that's flat to forecast, we still don't have inflation under 2%. That's their goal. We still have, unemployment sort of elevated, but I'm also not buying I'm not buying the excuses that they're giving for why employment is as low as it is. We've had a lot of high value jobs, like a lot of jobs in the tech sector that have pretty much evaporated. Like I said at the start here, Intel's down 15,000 people, Intuit's down 1,800. I mean, that's 10-15% of workforces there. That's huge. That's just like in COVID. And if companies have to they have to see this stuff coming down the road here as a risk, or the economy slowing down. I mean, I can personally attest that you see subscriber growth. If you're looking at fundamentals and you read into these reports of some of these companies, growth is slowing. People aren't spending as much on luxury things these days as they were last year. Like Polaris is down 12% with their sales year over year. I think their profit is down like 40% or something like that. Like they just got skewered this year. And I just think it's because interest rates are high and they're selling cars instead of, a $15,000 recreational vehicle, which is now 40. People just aren't spending that kind of money anymore. So, I mean, personally, I know a couple of people that have been laid off, that have high paying jobs, and, they're being replaced with, let's say, regular Joe jobs, like people going to, people working at McDonald's, something like that. That counts as a job. It's a one for one count when it comes to, the Fed. So even though unemployment is still down, it's not creating jobs in those high value sectors, which then keep the economy, spinning on all cylinders, as opposed to just half of them with like our, luxury goods and stuff like that. Hopefully that makes sense. And I'm not just talking to talk here. All right. So in the best interest of time, I know I got about a half hour left here, but wanted to just quick touch on the Nasdaq, and then we got some other things too. All right. So this is very similar to the S&P that we talked about. This is an alternative scenario. This might be a little extreme here for some sort of like throw 3-wave down, or sorry, like 5-wave down impulse. We'll ignore that for now. Again, we got to have a rejection first, right? But we could still probably see the same sort of thing where we have support at this level. The prior, it's I round up to 17,000, but this is your pretty key support level. We also have it on the way up. So this line is going to be super important and act as like a bifurcation zone for if we continue to see this sort of bullish price action, it's going to have to bounce there, or it's going to have to bounce and maybe make another channel or something like that. So another thing too is that you might see this head and shoulders pattern pop out. And I actually don't think that this is here yet. I think that this is a little premature. So maybe what we see here is we see this sort of short-term, like the short-term truncated, even though it's like like we could retrace a little bit higher, and this might work. This would still qualify as a flat sort of correction. But then we could have a bigger sort of ABC. Like I was saying before, it's all fractal in nature, where you could see something that's a more serious correction, maybe Q1 of next year, that kind of thing. Again, we just don't know. The market sold off really, really fast the other day and took a lot of people by surprise. That could happen again. Absolutely. Don't kid yourself. We haven't been through a market crash in like 18 years, or however many years it's been. So people in the younger generation have no idea what it's like to live through a recession. I think that's crazy. So like chickens are coming home to roost, whether we like it or not. And now it's just a matter of timing. Yes, I mean, you could probably make a little bit more money on the upside here, but I think that there's more risk being whole hog long and just going out and cutting the grass versus trying to be strategic about your positioning. Yes, you could get burned with shorts. Absolutely. I'm totally getting burned right now, but I have patience, and patience, I think, is what's going to be the key driver here of whether your shorts are going to be profitable or you're going to want to take a loss. Everybody gets wrapped up in the day-to-day sort of trading and environment where, everybody likes that instant gratification, right? Where it's, I want profits right now. Like I need to make money for Friday so I can buy some steaks tonight. That's what I did. But you don't have to suffer from this ABT, this always be trading approach here. So what we try to do is we try to look for really good setups. And that's a great way for us to try to play both sides. So why I wanted to bring that up. Oops, sorry. One last point. This is where we could see that right shoulder, where then we could see like a real, scary kind of correction where, people lose a lot in their 401ks and stuff. But to be honest, like just to kind of zoom out here, Nasdaq's just been super inflated no matter what. It's still following this huge, I mean, from the COVID low, we do have this really nice trend line here. And if we do see something like this, where, let's say we get a deeper cut in Nasdaq here, one second, maybe this might help. So let's say we get a deeper cut in Nasdaq where, we've broken the support line, and there's actually another support line that's pretty huge right before we had that other correction back in, in October. By the way, is this helpful, or am I just talking in the wind here? Just want to do a sanity check. Bueller, is this thing on? Okay.
Yeah, it's good gains. Thank you.
Okay, just laughing to myself. Don't mind me. I can only imagine what's going on outside my office door right now. People, my kids are probably making fun of me. So, anyways, so let's just say hypothetically that we have topped. This would be a pretty crazy channel that you could. I mean, this is a massively long-term channel, and there's no reason why we can't see something like this where we can't see this, this sort of ABC sort of movement. Because another thing that I don't know if it's going to be a popular opinion or not, but this really does look like a channel almost here for how do I say it? Like if you want to say an impulsive sort of channel where we could see something let's say like Q1 of next year where we just see just a total beat down of markets, but we find good support and then we launch up to, let's say, another high like 10% higher than the one we're at right now. So I'm not saying that the bull market is dead. I'm saying it's probably dead for a bit or just a small amount of time. And I just sometimes I think it's really helpful to take a step back and look at the charts and kind of say, all right, what is realistic? What is ridiculous? And then what is something that's plausible, right? So if we try to think about all the different plausible scenarios that we have, then it's going to make us better traders and it's going to make us better analysts. And it makes us better at reacting to things that don't go our way. So again, with trading spreads and things, you can definitely play both sides. But where I think we're going to have a problem is with this panic. This selling was different. It was a lot different. And yes, we can mark all these support levels that we want, but we still need to understand what the longer term structure is. And I do think that with the COVID low here, we've just had this explosion of tech growth, and I can see some ABCs here. And if this is true, this sort of completes. Sorry, this actually wouldn't be an ABC. This is it's sort of a unique pattern. It's like a 3-5, 3-5-3. I don't want to get too complex and freak everybody out. A second, but I do want to at least show the possibility of it. So you could also see something like that here. And another note, by the way, if you've been trading for a while, you most likely have noticed that. I'm talking like years, not just something where you've only been trading for a year, that kind of thing. It just takes a lot of staring at charts and a lot of trying to understand like what comes next. But usually the chart patterns and things are really reliable, and I have a lot of people that challenge me on technical analysis. They say, oh well, you can totally just draw lines on a chart and just say, oh, it's going to land here. But to be honest, like been doing this for 16 years now. I mean, it's accurate. I'm not saying that it's always accurate, but if you try to map out like the top 2 or 3 possibilities, I'd say 90% of all the price action is going to fall within that, except for those like major standard deviation breaking events. But even then, the market always acts like a rubber band. You just have to give it enough time. So with the rubber band analogy, it's you're always pulling it one direction, and once you pull it so far, it either snaps and goes back, and you have that equal and opposite reaction, or you just have a lot of volatility. And as you guys already know, no volatility begets volatility, right? It's always a cycle. So there's always these million things that contribute, all of these macro factors that contribute to like how markets behave. But then there's the micro sort of factors where you have dealers that hedge. Like I mentioned at the beginning of the call here, we have the situation where the recovery we had was very V-shaped, and I believe that was because dealers had a massive amount of gamma on their books that was call gamma, and they had a lot of risk. So we're seeing this sort of unloading of that, shorts getting squeezed again, and so anyways, to kind of get more to the point here, this is still arbitrary. Now, if I had like a log view on this, that might change how the price action looks, but I do sort of think here that you can make the argument that we do see this sort of structure here, and if this actually comes true, then we could see another sort of ABC up correction, and I don't know, maybe 23,000 would be reasonable, but this doesn't need to happen. We could just as easily roll over the cliff here, and I wanted to show that too, and what that might look like, because as of right now, course, everything is uncertain. We got a lot of we got a lot of volatility in the world. We have a lot of people that are a lot of countries that are kind of saber rattling right now. We just might get some bad news. And right now we just haven't really, we've had like a lack of bad news. I mean, it's not a bad thing, right? But I mean, also look at, and this is the daily level. So look at the Nasdaq, like look at the RSI I have down here. The red line, that's the RSI. And the orange line I have here is a money flow line. Now, the difference between the two is the orange line incorporates volume. So it's sort of like a season, I just said it, a volume adjusted RSI, which I find has a lot of value in combination with the regular RSI, because it's like, once you see something that rounds the corner, so the strength is diminishing. However, the money is still flowing in. And I think part of that is because, again, it's Fed day. People want to prop up the markets. People want to play with retail. There's a lot of that. So let's try to dive in here on a really, really close scale to try to dissect what's going on. So I already talked about the potential for like a 5-wave impulse here, which looks like it's going to happen. It just looks like there's no urgency to sell. But if I turn off all the drawings and things, and you just look at this to me is a pretty clear indicator that we have topped, at least for the current wave. And then we need to start looking at what's the next step, what's the next, I guess, obvious pattern. The next obvious pattern would be, aside from this, 5-wave up on a smaller scale, just 1 degree smaller, would be this sort of ABC pattern. So the tricky thing here, though, is we also need to know where the good bounce points are. So I posted this yesterday in the channels, where in theory, if we head down to this 0.382 level, that's where we see that's where we see a lot of these wave 4s typically terminate. However, this has been such a strong rally that I don't think we're going to see that. I think if anything, we might see maybe some decent support right around this 0.236. Because I also think too that the bulls know they're kind of running out of time when it comes to seasonality. If we're looking at volume, we can see, I go back to the daily level. We can see that the volume is increasing, but that was only on buying this dip here, and it's diverging. So we're seeing this, we're seeing this run down here from that peak, that sell peak, and now people are getting compliant again, and that's where they can, really rip the carpet out from underneath people. So let's see, Daxis, you commented here, the week was, from the midpoint to the top. Yeah, that's it's interesting. It's if we're looking at just the pattern in general, to me it seems incomplete, and it just as like a normal trader, just a normal dude sitting in a chair, right? Just looking at this. Sometimes, look, I don't actually post the things that my kids say, but sometimes I'll bring my oldest in here and I'll say, like, what does this look like to you? Just like something that's done, or just ask questions, and they're honest answers, like, no, that's not going to happen. I think I was talking to my son about the Bitcoin price, where who said it was going to 1 million, something like that. It's the biggest bunch of bullshit I ever heard. Sorry, pardon my French. But anyways, it's like you're looking at the markets and you really want to be reasonable about things. And then if price action becomes unreasonable, then you need to adjust. So overall, to kind of cap this out, I really don't think that this is complete yet, but I have to be prepared to be wrong. And how that can happen is we could see this irregular that I was talking about when we first started here. Oops. And I won't spend much more time on this, but we could see this higher high, and we could see this sort of move where that would be realistic. I think we've seen that. And if we look at the Dow, it didn't quite make a new high, but it's pretty close. And if you look at something like small caps, it also didn't make any. Oh, wow, that's a lot of crap on that chart. Sorry, guys. You can see I was busy. So I mean, we see these we see these longer term structures that really just need to blow off some steam. I mean, to me, this looks like a really clear sort of, maybe slightly higher retrace and, a big sell off, that kind of thing. So anyways, one thing I wanted to talk about to do, just to do this today, I thought that this would be a good sort of primer here on what we might see, at least, the upcoming week here. So let me pull up. I think actually futures is a better, like the Nasdaq futures, even though the points are different. Like there's some forward curve, I would say benditure of price space time. Yeah, I'm a total dork, I know, but yeah, at least I think that the futures volume is where a lot more action is. At least you can see it. So let me pull up. So some of you guys had questions about, and Tim, I didn't forget your question about SOX and natural gas. We'll definitely go through that. So what I'd like to see, especially right around like 20 minutes to 15 minutes, and also I can go a little over too if you guys can stay. But I like to watch this right at the end of the day, because this is where you start to see who's trying to dominate the close and who's trying to end the week at a specific level. Now we talked a little bit about like, deep pocketed players with their trading plans and things like that. That's where it's a little bit of a mystery that I haven't really, had a lot of exposure to. So, to be fair, like I'm speculating on all this. Like I don't want to, sound like I have the authority on, whatever. But, and by the way, something to note about these, 1 second charts. They're really just there for gauging like price action and volume and like the aggressiveness of how bulls or bears are trying to drive the market in either direction. I really like to watch this because, especially like at the end of the week or at the end of every day. I mean, I'm watching this at least the last 20 minutes for sure. And also too, when I place my orders. So a lot of you have asked questions about like, so where's a good spot for entries and exits? Let's say, we're getting close up to, a good example is this, right here. This point of control, right here at this level we're currently at right now. We saw a bearish engulfing candle yesterday. Decent amount of selling and not tremendously high volume, but still enough. And then today, even with the Fed speak, the bears have been in control all day. And how we interpret that is we want to take a look at some of the price action here and see kind of what they're thinking of and try to read it at least. And this takes time to do it. But like if I'm going to place a trade, let's say you want to do a buy the close, sell the open sort of thing, where typically Mondays can be bullish, especially if you have like a bullish Friday. It's sort of like a continuation of last week. But I don't think that that's going to be the case here because I think that, again, this pattern is incomplete. And given the fractal nature of the wave patterns and things, and guys, if there's one thing that I want you to take away here is that with probably 20 hours worth of study, you can all but master like the 40 different like combinations of patterns that will map out to every single time interval that you can look at on a chart. The one thing that I would highly recommend that you invest in with your own education is just reading up on like wave theory, like Elliott wave theory. Some people think it's all subjective, and it is. But once you get good at it, it's pretty damn accurate. You can make some really really nice calls and pick some really nice lows to buy and some tops to sell. And there's other things that govern it as well, but for the most part, I think there's a lot of good things that come from at least knowing a little bit of wave theory. So you can kind of discern, like, I mean, how valuable do you think it would be to know that a wave 2 is typically sharp, which we did see. Here, I'll show you guys again. So like, how valuable is it to know that a wave 2 is typically sharp about 70-ish% of the time versus wave 4, which is more lazy? So for example, how I might use that to my advantage is I would say, okay, well, I'm going to buy, at whatever point this is usually a bifurcation point at a 0.618 retrace. And we can dive into that stuff another day. I just wanted to try to talk through this, but so usually like you can buy here. This is called the classic 1-2 setup, but at this time you don't really know it's going to be the 1-2 setup. This was actually looking like we were going to do a quick bounce like this, and then maybe sell down here to make like a wave 5, or sorry, that it would be impulsive. But you kind of catch the drift where a lot of people were expecting one more wave down, and that never happened. So that's why I kind of think here it was a lot driven by the dealers. But if I would use the wave theory to my advantage, I would see here that, okay, well, wave 4s are kind of lazy. So maybe I don't want to make a trade right away. Maybe I want to see if it's possible that, like if I zoom in, I would say this is, a pretty likely path. So we zoom in, we'll probably see something like this. I would probably set like a limit order, like a GTC limit order here for at this like 19395 level. I mean, you'll have to, excuse me, you have to be more precise about your levels, but sorry, I mean like your measurements. But right around here, I would say that's where I'd start to look at the price action in order to time it. So once the price gets here or close to it, that's when I start pulling up the trading panel off to the side, and then I start, I start really driving down into the minute charts, the second charts. And again, it's not like it's rocket science, like you still see your volume bars, you still got the same views. It's just you're looking at just different time frames. So the bulls always love to squeeze on Fridays. I don't know why. It's just a fun thing for them to do. But you can kind of see here in the second chart that they're getting wrecked as they're trying to do it. And you'll see a diminishing enthusiasm for buying if that keeps happening here. So I think like the price action to me seems very not very bearish, but it seems bearish enough where I'm not going to add a long position right in the middle here. I'm going to wait. And so hopefully that makes sense as to like what I'm trying to articulate here. But you could see all sorts of stuff with with these wave patterns. You could even see or not wave patterns, but you could even see like an irregular where it's a little higher, and you don't want to be buying up there, right? So I mean, you could ease in at this level, but only if the price action is confirming it. Like if you start to see a lot of volume and a lot of like buy spikes, that's usually testing what the sell resistance is. So I would say most of the day is pretty much price discovery, except when you're doing like consolidation. So right now, like I don't really like, you can see they're trying to squeeze it, but it's just not working out much for them. They might be able to get a little bit higher, but I don't think that will make that much of a difference for that, because I do think that it would have happened probably earlier in the day when we saw that spike when Powell was speaking. So anyways, the long story short of this whole thing is that when you're trying to time things and trying to trade, like just having that basic knowledge of when is a good entry, when is a good exit, and if you're right, let's say 70-75% of the time, you can make good money and you can be consistent with it. Consistency and patience. So however, though, I say this like it's easy. It's really not. You always have to fight with your emotions. You always have to fight with, order fills and limit orders, and I got to get some sleep if I'm trading futures. So I don't do that anymore. But anyways, hopefully that's helpful. So I would say, I recommend reading up on wave theory. For those of you in the Gains channel, I have a getting started document which has links out to some good reading material. So I just wanted to throw that out there. So that's the main takeaway for today, is that you really got to watch price action here as it's developing, and get a good sense of who's in control over the last of the power hour, right? Also, too, you might see that at like half-hour intervals going into close, the probability increases for selling. So I would say, in my experience, in the last hour and a half of the day, if you start to see some decent, serious selling, most likely it's going to continue. It's going to continue on through, into close. So that could be like if we've hit a top, like yesterday. I mean, we pretty much just sold all day, and then we retraced overnight, which is expected. And then we didn't see that much of a pop today with the Fed announcement. So and then also we saw a little bit of selling after that. So I do think that this is trying to be controlled with any sort of squeezes to the upside. I think a lot of people know that there's excess in the system, and you're never going to have a soft landing if you don't have some sort of correction to values. I mean, forward PEs are completely ridiculous and unjustifiable in my opinion. I mean, look at Nvidia's market cap. Yeah, right. That's not going to be like that soon. But it could be wrong, right? Been wrong many, many times before. Just ask my wife; she'll tell you. So, anyways, so I wanted to touch on. So that kind of goes through like price action, going into close here, where you can see the value of the different time frames in some of these charts. It's really fun to watch when you have nothing to do and they're doing like a short squeeze or something. When you're not short, that's not cool. But or sorry, it's not cool when you're short. But when you start to see just a blast of like a shotgun blast of volume all of a sudden out of nowhere, and it just jacks prices up by like 0.2%, and then you turn around and before you know it, it's up 0.5%, and it's just crazy how fast they can move the markets if they really want to deploy the capital to do it. But it's expensive to do that, so you won't really see short squeezes when you have consolidations. You'll see them more at like the bottom of wave twos, or what is going to be a wave two to start like a wave three. But so here's a good example. We just got a big buy right here, a minute before the end. So these guys are going to try to drive it. I'll bet you 19,820 is probably where they might hit some sell resistance, or they might even get higher than that. But I don't think they'll have enough time to get it beyond the high. You would have seen that probably 15 minutes before the close. At least like the crazy volume that's required in order to do that. But I mean, stranger things have happened. But just from like a trading standpoint, this is where I think like if you want to practice reading volume and practice testing out indicators and things, definitely do it at the lower time frames, because all of that will scale to the higher time frames, and the higher time frames will give you more confidence for your wave counts and more confidence for your pivot points. So it's an inverse relationship, where if you want to practice reading what's happening today, and if you're day trading today, like that kind of stuff, then definitely look at your intraday, 1 minute, 5 minute charts, your 1 second, if you want to try to, place an order, place an execution. But if you're doing planning or macro trading, like if you're, let's say you're a fundamental investor, I'm sorry, by the way, if you're a fundamental investor, I'm not ripping on you. It's just fundamentals will matter eventually. They just don't matter right now. So they will always matter in the future. They will always matter, just not right now. So anyways, so that's enough about volume and that stuff. I wanted to touch real quick on like stocks and gas. Any questions before I do that? I'll try to answer them quickly. All right, so stocks here. What I think is important with semiconductors is that we'll see, there is some resistance up here at this like 240 level, and if we see the same impulsive wave structure that we've been showing in some of the other charts, we could certainly see that tested that zone, and then that would also set us up for the same head and shoulders sort of move down, where I mean, it's possible, but I think it might be a little premature. Like I said before, we'll probably see, something, I don't know, maybe like this, and then maybe like a, retracement up for this larger sort of, flat correction. And that's probably where we'll see another shoulder or something like that, which might even get a little higher. It happens. But, it's certainly a possibility. And this, depending on how high these waves retrace is really what informs the next move. So when it comes to semiconductors here, I think that there's a little bit more room on the upside. I did close my long today at a loss, but I'm also short hedged. So that was a calculated risk, because if this does happen, this ABC sort of move, and we sell down here, that short position is going to be very profitable, because it's a 3x leverage trade. So that should pay for the drawdown that I had with the long I had to close, plus then I was overhedged 2-to-1 short. So if this does happen here, that's a great way to again take those profits and then reinvest them into a long trade here to hopefully capture this like wave 5 up. So does that make sense? I guess it's the beauty of spread trading. All right, so one last thing I wanted to take a look at. So natural gas, here we go. Don't we love our natural gas? At least at the Gains Fund we do. All right, so let me actually flip back to my other screen here. This is so I've actually been watching the Japanese markets here because they were the ones that kind of started this whole thing. So we want to keep an eye on it. All right, so natural gas. So what this looks like to me, and we were talking about this a little earlier in the week, where this to me looked like a triangle pattern, which typically appears at B waves or at the end of a wave 4. This looked like a little bit too wide to be like a wave 4 sort of triangle. The retracement was a little bit too deep. I think it violated the wave 4 sort of thing. But an idea for a trade was, you would want to buy at this point here, and you can make the assumption that it's going to continue to build out this triangle, but that didn't happen. So what you could do with that is you could take your long and then move up a stop. So then if it does head below like it did already, or like it did the day after, then you're essentially prepared for it with a stop or adding some sort of short hedge. Because in my opinion, these triangles are a little bit easier to trade on a breakout because they're always going to come back and retest where they broke out, because there's still a lot of selling, but that's based on a lot of inventory accumulation over last week. But now we can do this measurement, and we could see here that this termination point is this termination point went further than this 1.23, this typical pivot point. But if we're looking at if it does pierce that level, most likely it'll head down a little bit more. But I still think that in the grand scheme of things, once you zoom out, this consolidation triangle here, that's just building more for the bulls. So we are seeing this sort of inverse head and shoulders pattern. And if we zoom out here, we can see that this is a big move for gas to go this high. I mean, this is huge. Like if we go from the bottom to this wave 3, that's a 40% gain. I mean, if you're in Boyle, that's an 80% return. If you just get up to the top of this wave 3, but the price has got to get off the floor first, and we got to get out of this consolidation hell that we've been going through for the last couple of weeks here. Even though this was a huge move down, I think a lot of us kind of bought right around here, something like that, right around like the 2.7 area. But just in general, gas is in a channel, and if you look at it at a higher level, we're coming into a seasonally very bullish time for gas. So I do expect us to see some sort of continuation here as we move into September and October. So yeah, long story short here, that's kind of what I'm thinking is going on with gas. And I'll just touch on gold real quick here. I know a lot of you guys have questions about gold. And thank you, Wendy. I appreciate the compliment. Stick around if you like. So just taking a quick look here, we've got this kind of weird complex structure. Like, try not to let all the lines and stuff bother you. It's really just more of like I think we've got this one kind of figured out, where this is a very complex sort of flat, like an irregular sort of thing. I have a pattern for it. I think I deleted it off the chart, but there's a pattern that's pretty close to what we're actually seeing here on the chart. It's really nice when you see those, because again, some people say technical analysis doesn't work, but I beg to differ, just because it's been working out for me for the last couple of years. So looking at all these sort of charts and things and starting to do that pattern recognition, I think is what's important for being able to pivot quickly. Because if you start to see something else like, oh, that's a channel, or oh, that's a bull flag, or that's that's definitely a pennant, and then no, it's not a pennant. Like, again, the gas chart I think we just went through, It looked like a pennant until it wasn't, you know? So then what happens after it breaks through the bottom? Well, you need to have a different trading strategy for that. So either hedge your longs and then, you know, and then cash out your shorts at a profit wherever it seems to be bottoming, and then you know, ride it back up for your longs or improve your cost basis. You know, you usually have about 3 options. So just kind of round it off here with gold, and then I'll touch on the yield, and I think we can wrap. But gold, I think here is just taking a quick breather. Gold has been very, very, it's tracked very, very well to the yield so far. So you can kind of see, like if I pull up this chart here, this is like the correlation chart. The yield is inverted, and so is the dollar, and also the VIX. So these things do have that negative covariance that you can see. And I mean, it changes based on the time frame, of course, but the main takeaway here is that these things are pretty much in lockstep. So if we do look at something like the 10-year, you know, we see that it's heading down, but you know, it's heading down because people are assuming that we'll have a rate cut in September. And as we get a little closer to that, let's say we get some really bad, or not really bad. Let's say we get, you know, looks like inflation. You know, we get a hot CPI print or something. That'll send yields screaming up, because then the probability of a rate cut for September is going to decline. So those are little things you gotta take a look at here if you're going to trade rates, or you know, try to infer what's going to happen next. But I mean, I know if some of you here are from PAM, you know, Robert's thinking that this is a 1-2 setup here for the yield. I actually think it might be a little early for that. I don't want to get in trouble here, but I think it's probably more realistic to see an A equals C sort of correction for these rates, because we did break this lower trend line. So again, if you're a bond bull, I'd say there's a possibility that we could see something like this, where it heads up a little bit and then drops down and then tests the bottom, and then we have another real sustained move up. But then that'll run into this trend line. So I think that's probably what we'll see for rates. We probably won't get that big of a bounce just yet. I think that people need to see what's happening. And again, this is not, you know, this is not going to go into October. Like this will resolve quickly once we know more information about what's going to happen with the rates in September. So with that being said, that's also probably what's going to happen to gold on the inverse. So so this little bump up here that we might see, this bump down, how we might see that on the gold chart is that inverted relationship, where we could see this, you know, this move down, a little corrective, and then probably see this, because it still has to test this breakout, this trend line. It already did, so it doesn't necessarily need to do it again. But you know, this is still probably what we might see for gold, where we might have this ultimate top here right around this, like this 2,600 level. So with that being said, what kind of questions do you guys have? We're talking for like an hour straight. Get something to drink. Okay, I must have explained everything perfect, which never happens. But again, silence is compliance. You can ask me anything you want. What my favorite recipes are, why I wear cowboy boots all the time. All right.
Gaines, I got one.
Yeah. Mr. Mike.
Yeah, I'm still struck. So Nasdaq chart, I'm still struggling with if we're in a B wave, the whole, why is this a 5? Why does this look, which it does. It looks like it's a 5 wave, like you have drawn out there your white. If that's the case, why is that not a ABC? Right. And if this is a 5 wave, then why would this not be a you know, the A up before the B down, before the C, which culminates with that X top? Does that make sense?
So let me see if I understand. So with this, so we did have this this ABC down,
right?
At least what it looks like here. So it looks like we have this ABC down, And this, I guess it would be confirmed. Sorry, let me get a cleaner chart. 1 second. Got too much crap on that one. Okay, so kind of using what we were talking about before, if we just kind of ad lib it here. So the first leg down, yes, we can always consider that A. What we don't know yet is if this is the B top officially. It could be, and we could, and that would measure out pretty well for this,
Right.
for
Okay.
this bottom here. And that would be, a very clean extension, very clean measurement. That doesn't always happen, but it could. So let's assume here that. So what's confusing about this, and I want to try to be careful with this, because this is what kind of gets a lot of people. There's a chart pattern called the diamond top, and I don't like to say it all the time because it's not super reliable, but when it works, it's awesome. You could see something like this where you see a lot of this consolidation, and because we did see a lot of that, a lot of that sell, that was really. I feel like it was being preemptive, where you could see that. Let's say this is the top, and sorry, 1 second. We're not going to know until probably like early next week. But if we do see this, and let's say it continues to travel down, we could see another ABC, just at a higher degree. So you could see something like this. Let me make it white. So you could see this at a higher degree, and that would be like your first, sub A wave down in your C leg. Does that make sense?
Yes.
Okay, so like the diamond top is kind of what I look for. Sorry, I should say the diamond top. I feel like I see it a lot more when markets are very bullish, and they're not giving it up much, and things are pinned. So you can kind of see here that this entire range, there's a lot of sell delta up here at this point of control. So you see that there's a lot of resistance up here, and it's getting stronger as the days progress. I mean, if any day was the day to make a new high, it was today, but we didn't. The bears were in control the entire time, and the only buy up we saw was really just typical give and take market action or market price action. So one other thing I would say is that let's assume. Okay, so a couple days ago, we didn't know any of this. We didn't know that, we're getting any selling at all. Like, let's say we're right here, and it's just nothing but up. Well, given the, regular charting rules and stuff, like you could make the case that this is just a really extended
Right.
C leg. And it happens. It does. But I think that this entire structure, because we've been given the clues that this is like an ABC here, at least what had been preemptive. I think what we could see is this would qualify as like an ABC. But if we want to talk about like a bullish scenario, we could be too early entirely. And this might be a more accurate representation of what we might see. Like we might see this like
Right.
a trend line test sort of
Right.
thing.
Yeah, that's what I was saying. I mean, I think that's because when we drew out when your current A leg up, I would say there it appears that at which point that would make sense that there's a 5 wave there. If we're in a leg, like if we see another bounce back up to a new all-time high, or not a relatively recent high above the current, which you show there as a B, then I could see that this 5 wave pattern as part of that A wave would fit like you have drawn there.
Yeah.
So
yeah, I mean it could fit. But usually when you see these ABCs, if it's not a zigzag, and for those of you who don't know, wave theory really well, like Master Mike over there, sometimes there's a pattern you see called a zigzag, which I think are they're the most common corrective structure. I'm just trying to illustrate this in the yellow here. The pattern is 3 5 sorry, 535, where you'll see this, this sort of thing here. Let me get this out of the way. Where you'll see this, where you could see, a series of fives for your A leg and your C leg. Now that's what I think, and most major corrections typically are zigzags, just because you will have that powerful wave down, like that wave 3 down. But also C legs can be very powerful as well. So like C legs and wave 3s are typically interchangeable when it comes to like corrective patterns. But if you see a zigzag like this, then you can see that mix of wave 5s or 5 waves and 3 waves. However, what I've found is that typically the rules or the confines that we have to stay within when we're doing some sort of corrective analysis is if the first structure is an ABC, then most likely the rest is going to be a series of ABCs. And they don't necessarily have to follow the same rules from like distance or extensions, because everything is clear in hindsight, but it's how we try to forecast these things, which turns you from a boy to a man. It's like, oh crap, I'm wrong. But I do think that again, if it doesn't look like it fits, you're probably too early, or like don't try to force it. So with this sort of pattern here, I've been staring at this for the last couple of days, thinking it just retraced a little too high for a C, for like a C leg. So it might be like a 5-wave impulse. But then there's really no pattern that's like a 3-5-3, or like a 3-5-5 or something. Like you don't see a lot of those. You don't see a lot of those mixes, if that makes sense. So usually I would say the higher probability is going to be, we'll see like an ABC like this down to continue the correction. But if we don't see that, in my opinion here, the key level to watch, if there's one thing to take away here today, the key level to watch is this 50% retracement. So even if we see a slightly higher high or something like that, then yeah, we might actually have, a 5-wave up sort of thing. And then that changes. But if we don't see a new high here, and we do see just a series of these little ABCs, and they, and it just is reflective all the way down to this 0.5. If we sell below this 0.5, in my opinion, that is going to be the big warning sign that there is weakness in markets and we will not bounce. And that's where I think a lot of people are going to get wrecked, because they're going to buy at, let's say it sells below here, this 0.236. I think a lot of people are going to buy right around here, and you'll see a lot of support here. You might even see a day or two consolidation if it happens. And why that happens is because people think it's the bottom of a wave 4, which 20 minutes ago I just said, yeah, you could load up longs there and you could catch a bounce. But what people don't do is they don't sell when they're up on their new long position, thinking that it's going to go higher and make a new high for like a wave 5. And then what happens is it does this. So you want to sell your longs right here, because there's a risk of this going further down. It could turn into a wave 3, and then this becomes this, and you're screwed down here. Or what you could see is this bifurcation, where you see maybe like another down push, and then it moves up here, where you see this last little wave, this last little like 5-wave up. But I think it's more important to identify where you're at and like what can potentially come next, just by trying to infer that from your prior waves. So that's why, again, I was trying to say, like, there will always be give and take, and there'll be a bounce. But since we actually don't see a 5-wave impulse on this first wave down, what I would say is that if we do bounce here, most likely we would see this, and that becomes our new bifurcation point, where that's really where you'll see this next C leg up to the top here, or you'll see a continuation down. So in my opinion, I wouldn't take any long trades unless I saw the okay. So like, yes, I'm massive short right now, but I wouldn't take any more long trades to hedge unless it made a new high. Or even then I would only take like a 50% hedge because we're just really high right now. We've got lots of stuff coming down the pipe, and like again, elections and volatility and stuff like that. There's way more downside risk than there is upside risk, in my opinion. And we just went through another massive rally that pretty much all but canceled the sell-off that we had. That can't keep happening in perpetuity. And some people say, well, yes, it can. No, it can't, because valuations are so stretched that like you're still going to have all this downward pressure on prices. And also too, what I mentioned before about institutions that don't have any more inventory left of stock to sell. So that's kind of one of those things where, you got to combine the macro things with the micro things. And the micro things is like, okay, how do you read the chart? How do you read the volume? This is where, in my opinion here over the next couple of days and weeks, this 50% retrace is going to be the most important level for us to watch. Whether it's going to be bullish essentially into the election, or if it's going to be bearish, and it's an engineered thing where, the party in power always gets blamed for, something like that. So again, so combining that with the macro, which, I'm placing more, I'd say like a 60% chance that we'll see the bearish scenario here where we do head down to this level of support, versus just seeing more continued upside. Just again, there's lots of saber rattling going on with different countries. Where rate cuts signal to institutional investors that recession is here, and they're only cutting because things have slowed down. And usually the Fed uses all these lagging indicators like, unemployment data from last month, or CPI, stuff like that. All that stuff is just cherry picked data. And it's a little tough to actually gauge the health of the economy. But what I think is what I think gives you a little bit of an edge is if you look at something like housing data, or you look at interest rates are a big thing, inverted yield curves, all that sort of stuff, and it might take months and months to develop. But most people, like, it's easier to be long and just stay long. But once we start to see these macro changes materialize, markets can move very, very fast in a negative direction. And that's when you get caught, being complacent. And that's the environment that we're in right now. Just to be totally honest and realistic, we have a lot of people that are just blind bullish, like it's just going to go up and up and up. And eventually that won't work anymore. And the reason why it's not going to work is because things are slowing down, and you cannot justify these forward PEs that a lot of these companies have. And you're also seeing layoffs of the high value jobs. You're seeing, just things like that. You're seeing consumer spending pull back. You're seeing people being more judicious with their dollars, not going to McDonald's, so cooking more food at home. Like, it's the same sort of stuff that we did with COVID, only we don't have to wear face masks. But again, I still think that we're going to see some layoffs, and I don't think it'll be a soft landing. I think we are in an everything bubble, and it'll either peter out and we'll have a sideways decade or something, or we're going to have just a big old fashioned crash. I don't know. We'll see what happens. But the fun part is, like, you guys at least get to be, at the front seat while all this stuff happens, and you guys get to essentially witness history and trade it, which is going to be even cooler. And I think that's, one last thing to mention is that there's a lot of people that trade, and they're very, very serious about it. Like, don't forget that you're doing this for fun too, unless you're doing it to survive, or you're doing it for a job, like me, I guess. But just wanted to say that, like, it's been a tough week for people holding shorts. It's been an even tougher 2 weeks for people holding shorts, especially if it's been from the bottom. Like, for example, like the Gains Fund, it's been it's been beat up because we had some shorts thinking that it was going to be one more wave down. And again, 5 minutes ago, I just mentioned larger corrections typically start with 5 waves down. And a lot of other, savvy investors and stuff that I talk with we're all kind of fooled by that. And part of that is also just because, again, we have these things we can't control, like a lot of panic in the VIX, dealer hedging, that kind of stuff. So, all in all, I think that we're coming up to a very exciting period of time in the markets. I feel like the recession sell-off sort of event has been a little late, where it probably should have came like in spring. And why I say it should have came in the spring is just because of seasonality and just macro factors and stuff. But if you guys remember, we were supposed to have 6 rate cuts this year. 6. Remember the dot plot? What a joke, right? So here we are, August 23rd, and we have 0 rate cuts. We have no dot plot, and we have the Fed coming out today saying inflation's all right, but unemployment is still dragging on us, and we're not. It's time to make a change, but they didn't say when. So it's essentially a lot of nothing. And I just think that markets are just delusional, trying to keep it propped up here, looking for a Hail Mary pass that's going to stimulate the economy some more and get hiring back on track. But the Fed's not going to achieve its goals if it continues to do that. So they need to make it hurt a little bit more so they can so that the economy goes into a mild recession, and they still keep inflation sort of high, so the Treasury can essentially invisible tax the public. So that's pretty much what inflation is. It's like an invisible tax for all the money that they spent for during COVID and stuff. But that's just kind of how it works. So we might see something like the 70s come back again, where energy prices and stuff are the hot commodity, and we might see equities lagging for a while. Just trade sideways for a while. But there needs to be a bigger catalyst, between all that stuff. So I don't want to ramble anymore. It's just, I think I've covered a lot of different topics and things, but overall, the couple of things I wanted to accomplish today was I wanted to at least just give you guys here's where the state of the market is, where I kind of think it is, and then give you guys an opportunity to ask some questions, and also show you guys some of the methodology that I use to pick levels to buy and sell, and also some of the thought process behind where would be the most, I guess, the highest probability place to buy or sell. And I think we've been staring at this for the last 5 minutes, which is, this bifurcation point here, just as an example. So hopefully this was helpful. I guess I'd be happy to take one more question here, and then we could wrap up. Unless you guys want to stay and party, I guess. All right. Well, Mike, I see you come off mute. All right. I guess we can wrap up today then. Well, thanks everybody for joining. I really appreciate it. If you guys aren't part of the channel here, and if you're interested, please send me a DM or anything like that. I'd be happy to have you on the winning team or the team that's about to win a lot. I don't know, whatever. But it's gonna be fun. It's gonna be fun. Just ask Mike; he'll tell you.
Yeah.
All right, guys.
Valuable.
Yeah. All right, guys. Thanks a lot for joining. You guys have a wonderful weekend. All right.
Thanks, Gaines. See ya.
See you later. Bye.